In this video, you're going to master how to use your trend line properly. Mastering of how to use trend line is very pivotal because markets usually move in trend. So you put a line for easy identification. Now I will do a little demonstration before we go into the chart for you to see what I mean. A lot of people have been using trend lines wrongly, and that's because some people have taught it wrongly. Because even when I started, it was a bit difficult for me to fully comprehend all the trend line bounds, trend line this, trend line that, first touch, second touch, third touch, breakout, and all that. But I'm going to make it very super simple in a way that even if it's just only trend line strategy you're using, you'll be good. Let's begin. This is higher high, higher low, higher high, higher low, higher high, higher low, higher high. Okay, so let's assume this is how the market is going. Now what you will do is that you come and put a line from here. See? So you put a line, first touch, second touch, third touch, right? So as market is doing higher high, higher low, higher high, higher low, it touched it the second time, higher high, higher low, it touched it the third time. This should be your entry. Third time, this should be your entry, and this should be your take profits. All right. Okay. So the next thing to do is that, of course, market is not going to do higher high continuously. So at some point it will reverse. Now let's look at what happens. So when market is doing higher high, higher low, higher high, higher low, higher high, and it suddenly reverse like this, and instead of bouncing from here, it breaks it. Once it breaks it like so, what are you going to do? Bias has changed. You're no longer looking to buy, you're now looking to sell. How are you going to enter this market? You're not going to enter outrightly as soon as it breaks. What are you going to do? You are going to wait for retracement. So sometimes it may retrace back to the line, at times it may even retrace and break it back. You see the reason why you don't just enter outrightly. If it breaks it back, you're not doing anything. So you want to see this market the way it is right now, if it's going to break this high or it will break back the line. If it breaks back the line like so, this is where to enter. And if you don't want to enter here, you wait. The perfect place to enter is for you to wait for the market to break that same candle that broke the line initially, like so. The moment that happens, you're entering immediately without any iota of doubt, without any waste of time. So you enter and your stop loss will be above the line. Now let's go to the chart so that you can see a typical example. Now, yeah, this is a clear example. This is a clear example. This is Euro USD for us. Now, you see, market is doing higher high, higher low, higher high, higher low, higher high. It breaks the structure. So what are you going to do looking at this? If you want to use trend line, is to put your trend line like so. Put it on the body. If you want to put on the wick, fine, but it's better you put on the body. Let the trend line be at the body. So the moment it breaks it on 4 hours and you wait for the candle, 4 hours candle to close, then you now go to 15 minutes. And then, yeah, so you see, you go to 15 minutes time frame and you see, look at, this is the candle that breaks it. So to be on the safer side, all you need to do is to wait for market to break this particular candle that breaks the trend line. So the moment that happens, see, this one breaks it. The moment that happens, you do what? You're hopping. This will be your entry, like so. Remember what I told you. Your stop loss should be above the trend line. should be above the trend line. So you hopping, you enter sell. So let's see. So of course, market will do its thing, buy, sell, buy, sell. How do you know? How will you determine your take profit? Determine your take profit from the lowest low. Yeah, here the next. This should be your take profit. Here, this should be your take profit, and if you measure that, that should give you 80 pips. Yeah, more than 80 pips. 81 pips actually, which is good. Good trade, good setup. Yeah. So let's take a look at another example, which is gold. Now, if you apply your trend line like so, trend line is always good. First touch, second touch, third touch. So you see that on the third touch, what happened? You broke it. Yeah, it broke it. If you zoom this, you see that it broke it. So what are you going to do? You wait for market to break that candle that breaks it. The moment it breaks that candle that breaks it, that's when you enter. So you wait, see, as soon as it breaks it, you enter, you sell. So your take profit, your first take profit should be here. First take profit is here on the body. Remember, we're using the body, not the wick. First take profit, then second take profit will be on the fair value gap or here. So you see there's a fair value gap here, from here to here. The three candles apart, here, here, here. So if you put your second take profit here, which is the beginning of the fair value gap, it hits it. First take profit, second take profit, and if you calculate the pip, this is good. That's a lot. That's huge. 600. That's 700 plus pips on gold. See, just using only trend line. Only trend line. So you see, strategy is not the problem. Your problem is building confidence with one particular strategy. You don't have to do all the strategies. You don't have to, try everything. Focus on one strategy. And this here is a good one to start with, which is trend line. Trend line break, retest, and you enter. That's it for me for now. See you in my next video. Don't forget to like this video, share, comment, and if you want to sign up in my mentorship, feel free to sign up in my mentorship. Everything, information you need as regards to how to contact me is on the description below this video. See you. Bye for now.